Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, it is April here in New York.
That's right.
It is my 10-year anniversary at Bloomberg.
This month?
This month.
Oh, that's awesome. You're going to get a pylon. That's great.
It's put me in a very thoughtful mood. A whole decade since Joe tricked/enticed me into coming here. So thank you, Joe.
Are you happy about how it worked out?
I
did try
I can't complain.
Okay, good.
I will say it was a bit rocky in the beginning, but we worked it out.
All right, where's this going?
Okay. In that 10 years, a lot of things that I would never have expected to happen have happened.
Yes, go on.
One of them is the phenomenal growth of the crypto industry.
Yes.
So I first started writing about Bitcoin in 2011, and I will openly admit that I think by 2013, I had written, 3 or 4 obituaries for Bitcoin as well. So, I got that wrong, clearly. But one of the other things I got wrong on crypto is the phenomenal growth of stablecoins.
Yeah.
So you look at something like Tether, the world's biggest stablecoin. We talk about it in the same sentence nowadays as Eurodollars, for instance.
Mm-hmm.
And the company itself is this huge player in financial markets. It owns more T-bills nowadays than some countries, which is all pretty amazing.
Well, let's be honest for a second here. You might have thought that Tether wouldn't even exist at this point because it had a reputation for years and years. It's like, they're a bunch of scammers. They can't pass an audit. The money isn't there, et cetera. It's going to go away. Why would you ever hold a Tether? We asked Sam Bankman-Fried that years ago. Why would you hold a Tether when there are other companies that have done audits, et cetera? There are many people not only setting aside the size, setting aside all of the assets that it owns that backs the world's most popular stable coin. There are many people who just thought, this company can't continue.
Oh, totally. The other thing I thought was that U.S. officials were never going to grow comfortable with the idea of a loosely regulated foreign company creating synthetic dollars. But, the Trump administration seems to have some other ideas. So we should talk about all of that.
Let's do it. We have the perfect guest.
We do have the perfect guest. We're going to be speaking with Tether CEO Paolo Ardoino. He is, of course, the head of the world's largest stablecoin. So, Paolo, thank you so much for coming on the show.
Thank you for having me. I'm very excited to be here today.
So, just to begin, has Tether's growth surprised you? Did you ever expect to ramp up to this degree?
So I joined Tether very early, was early 2015, just after a couple of months that was actually created. And we were discussing internally, myself and Giancarlo, and we were asking ourselves, the biggest number we could think about in terms of growth and projection of growth of our stablecoin was between $100 million and $1 billion. And now today is $144 billion in total issued tokens. So we are incredibly excited. We are impressed ourselves. But I must say that it's all happened organically over a decade.
The stablecoin business is so sick, it seems to me, right? Because you hold all of these assets that back one-to-one these tokens that move on blockchains, and you collect all this interest, and the holders of the coins don't collect any interest. According to a release on Tether's own website, you made $13 billion in 2024. Various estimates have your total employees somewhere a little bit below 200. So that makes per profit employee somewhere close to 90 million per employee. That's basically correct math, that this is one of the most extraordinary, maybe the most profitable business in the history of business?
Yeah, I think it's definitely extraordinary. I define Tether once in a century company because of the capital that we have, given our profits. In the last 2 years and a half, we made around 20 billion in profits, and we almost distributed a very, very tiny part to the shareholders. I mean, I name another company, another fund or whatever that distributed less than, 10% or probably even less than 5% of profits to their own shareholders. So that is something that is unprecedented, and it's setting Tether to be able to reinvest 95% of its profits in keeping growing its distribution network for the US dollar. and also investing in other pretty cool things from artificial intelligence, Bitcoin mining, and tens of other opportunities around the world.
So you mentioned distribution of the US dollar, and there is some tension there, right? I mentioned earlier that I never thought regulators were going to be okay with someone basically creating a synthetic dollar that can trade around the world. But times have changed and some things are shifting on the regulatory front. But are you a competitor to the US dollar? Plenty of people would say you are, or are you something that perhaps complements it?
I don't think we are a competitor to the US dollar. USDT is a digital dollar that is backed for most of it by US Treasuries. We are bringing the US dollar out there in the emerging markets, the developing countries. We have, as of today, more than 400 million users. Actually, it will be 550 million users. I'd like to be a bit more conservative to avoid double counting users. So I would say more than 400 million users. We grow at the pace of 30 million new users per quarter. That is, again, we are not Facebook. We are just a digital dollar. So it's really unprecedented and staggering. The reason why we are interesting for the United States and the regulators are now appreciating who we are and what we are doing is the fact that we have been building the biggest distribution network for US dollar in a physical form and a digital form. We have millions of touch points around the world in the emerging markets. We never approached our distribution going through institutions in the emerging markets, but we built physical infrastructure from kiosks in villages in Africa to bodegas in Central South America. And again, we are just distributing a digital dollar. And look, the reality is that the US dollar hegemony is very, very important for United States. And when we are in Africa, when we are in Central South America, there is not much US presence. There is present, apart maybe McDonald's, but in some countries in Central South America, the actual presence of infrastructure in the United States is not there. So what Tether is doing in those countries is purely building that infrastructure and trying to, in a way, combat, actually more than in a way, we are, I think, the last stronghold before the very strong push towards de-dollarization made by the BRICS countries. So we see, for example, that in Central South America or in Africa, there are hospitals, schools, libraries, and airports that are built by China. And again, there is an interest from the BRICS countries to launch a digital currency backed by gold. Plus, they are building an infrastructure in these countries. So all the employees, all the people that will rotate and gravitate around these new infrastructures built by BRICS countries will start using something that is not the US dollar. So I think it's becoming very, very clear that actually Tether is the best ally for the United States, is the company. When we are also in these countries, we are not seeing NGOs, we are not seeing charities. We are the company that also solved or is solving financial inclusion in the strongest way possible.
Joe, I got to say, it's a little bit depressing that, a company that was founded by an Italian in Europe, incorporated in the BVI, although I think you're moving to El Salvador.
Correct.
Is the ambassador for U.S. presidents.
Is the bulwark
exactly.
against the end of the dollar. Yeah, well, history can be funny in that respect. Why haven't you ever been audited?
So in the past, with the past administration, last 4 years, I must say that it was not easy to deal with the past administration. So I remember Senator Warren sending letters around to different organizations. There was a case of the Operation Choke Point 2.0 that was very aggressive towards the banking industry that was supporting cryptocurrency companies. On the other side, that letter also scared away and was targeted towards the big four auditing firms and other auditors that were then disincentivized to go against the strong will of an administration that was really against crypto in general.
Just real quickly, so obviously you hold your money, or a lot of the assets that you hold are with Cantor Fitzgerald, its former CEO, Howard Lutnick, now the Commerce Secretary, friendly with the administration. There has been this changing of the guard. Has the changing of the guard at the administration level had any bearing on the reason that you're here in New York City and comfortable visiting the U.S.?
So I has been always comfortable to visit the U.S., but you want usually to go where what you are doing for 97% of your time, or 80% of your time, given I sleep only a few hours, is being accepted and is not considered a very bad thing by the administration, right? So you want to deal with people that support what you're doing, and at least they have the will to understand what you're doing. So actually the change in administration is what is making possible for us, for Tether and other many cryptocurrency related companies, to start to deal with the big four auditing firms. We are in discussions. We have multiple discussions on the topic of audit. We hired a new CFO a couple of months ago. It's great. Simon went through multiple contentious full audit across his entire career. I don't think that our audit should be contentious, but given, again, the complexity and the new field that is crypto world, is possibly one correct term and adjective that I could use here. And look, we are very positive that the full audit is our top priority, and I'm pretty confident that we're going to make it.
So just to be clear on the regulatory point, things are changing, as you just mentioned, and previously there was regulatory pressure on the big accounting firms to not work with you. That seems to be going away. That's going to allow you to do an audit. Do you have a time frame for when you might do that?
So in the past, we committed a few times and we provided timelines that were not realistic because of the fact that, as I said, the administration really doubled down on trying to kill an entire industry. That was very, very sad to see. So again, we are moving as fast as we can. There is, of course, some change that is still needed among the big four auditing firms. So while they are getting more comfortable, look, the administration changed only 2 months ago. So give them a little bit of time to get comfortable. And we are providing all the, we are, again, already in discussions. So it's crazy. The administration changed 2 months ago, and we are already in discussions with big four auditing firms. So that is the best thing that I can say. And again, the fact that we hired a new CFO and that has, the highest experience in the sector to get through audits is something that should reinvigorate our position.
What's the complexity of doing an audit for a business like Tether? I've always wanted to ask this question. So, you need a professional accounting firm to do this because you want to give people who use Tether, investors, some sense of safety and stability and truth in what you're portraying. But at the same time, it seems like, you should have a pretty good idea.
It seems simple. You just count up the treasuries and count up the tokens. Right. And if they match, what are we missing here?
I agree with that. In fact, the problem, I don't think, is about the complexity of going through our reserves, because as we said, we keep the vast majority of our treasuries in Cantor Fitzgerald, that is a very highly regulated financial institution here in the US. I think that the confidence in the industry, in the digital assets industry, is growing among the big four auditing firms. And look, on the other side, you can go on blockchains, and blockchains are very, very transparent. So you can count the liabilities through the transparency of the blockchain. And on the other side, you can just independently contact our custodians. I think that what we expect from the full audit is also confirmation of our good practices that we have within the company in terms of controls and safety and proper management, for example, the private keys and all that stuff. So that's a process that we want to make sure that we go in the deepest details possible with our auditors, because there is nothing that excites me more than prove that we were always right. We had our Lightning 2024 going out there saying Tether has the money. We are releasing a quarterly attestation from a very reputable auditing firm called BDO. They are international. So there are many, many different independent validators of our research, but we just want to get the full audit done.
Circle, one of your competitors, holds its money in a money market mutual fund from BlackRock called the Circle Reserve Fund. What is the advantage of going out and acquiring QSIPs of various flavors directly, such that you're a direct holder of treasuries, rather than outsourcing it like that? Here's an institution, BlackRock, they set up a money market mutual fund that you could just buy into and not have to think about that part. Why the preference towards the direct holdings of the bills and bonds?
So that's a good question. So we prefer to have a direct control over the process, and we do that through Cantor Fitzgerald. Also, having that direct control allows us to have access to the infinitely liquid repo market. So we think that is, in case of huge pressure from the markets and huge redemption pressure, our facility is much better than anything else attempted by our competitors. Look, think about in 2023, our major competitors had and a big issue with Silicon Valley Bank. They kept uninsured cash deposits there. In 2022, Tether was attacked by funds that were clearly trying to cause a bank run on USDT. They amassed billions and billions and billions of USDT just to try to sell them under par on the secondary markets, on the different cryptocurrency exchanges. Again, Tether never refused a redemption. Tether never failed to redeem at $1 each token. But at that time, when that happened, these short sellers were trying to just cause a bank run. And so what happened is that Tether was able to redeem $7 billion in 48 hours and $20 billion in 25 days. So $7 billion were 10% of our reserves, and $20 billion were around 20-something% of our reserves. So I mean, if you look at Washington Mutual and many other banks that failed from 2008 and after, there was no bank that was able to support a 10% bank run, and we did it with flying colors. We could have gone till the end. That's what means to have a proper repo market and very deep liquid market for treasuries. We keep all treasuries that are basically 3 months in duration, 90 days. So I think we built the best facility for handling any sort of redemption and provide the proper amount of trust that our users need around the world.
So you made it through 2022. It must have still been fairly traumatizing or scary at the time to have that much withdrawal pressure on the business. Have you changed any of your redemption policies since then, or perhaps instituted, new risk management around the peg point?
So the concept of peg is interesting, right? People refer to the peg as, if USDT or another stablecoin trades, 2-3 basis points or 10 basis points below $1 on secondary markets, that is not the peg. The peg is our ability, the official peg of USDT is our ability to redeem every token that can be sent to our primary market, that is our platform, to $1. So we always redeem every single token at $1. So if someone on the secondary market is trying to short it and sell it 1%, 2% under par, that is a completely different thing. It does not mean that there is an actual issue. In fact, we demonstrated that we were able, even when we were attacked in a very heavy way that would have destroyed every single company, every single financial institution in this world, we survived and very well. So actually we had still PTSD, I must say, after that event, but I think that really reinforced our commitment to transparency. It's funny because first we were accused to not be transparent enough, and then when we are now very transparent and we are also saying how much money we are making, people get upset because we are making too much money. So it's quite interesting how it can go both ways. But look, now I think that there is no doubt that Tether has in this moment $144 billion in issued outstanding tokens and around $164 billion in excess equity across the group. So it's something, so we have $20 billion in proprietary capital within the company, among which $7 billion are specifically to the last attestation, where specifically attributed to the excess reserves of the stablecoin. But again, the group has $20 billion in additional equity. So it's very rare that you see a company like this. And so, yes, we want also the fact that we basically took out a very small amount of dividends proved the fact that for us, the safety of our ecosystem, the safety of our company is paramount. And if you look at our other competitors, they keep, some peanuts on top of their reserves.
You mentioned people complain about, you're making so much money. And, look, people are always going to whine about other people doing well. I get that. But I can think of one group that might genuinely have an eye on the profits, and that is institutional traders of crypto. And the question I have is, you have this amazing amazing business model where you collect all this yield on your treasuries and none of it remits. And how long can that last? Because I would imagine that if I were some hedge fund or if I were some high-frequency trading shop, et cetera, I would not want to be holding this token. If I were holding $1, even for a minute, I would put it in some sort of money market mutual fund, collect a day's worth of yield, whatever. You're not going to leave that in a non-interest-bearing asset even for 10 seconds. Do you believe that the business model, the margin between holdings and what you pay out, can sustain itself with competition, or will it inevitably compress?
So you make a very good point, but I think that the issue there is that you would be right if stablecoins in general would be a product made for the United States. Stablecoins are not a product made for the United States. Sure, stablecoins can work in the United States. Stablecoin can be used as a faster settlement system across the interbanking settlement system. But the reality is that Tether never focused on institutions. Institutions would betray you for 1 basis point. They would they want, as you said, to use money market funds to maximize their returns. That is fair. That is normal. But so Tether built the biggest distribution network for US dollar in the emerging markets and developing countries, where if you think about Turkey, if you think about Argentina, if you think about other countries, the national currency of these places has been devaluating very, very fast against the US dollar. So in Argentina, I think that peso Argentina in the last 10, 12 years devaluated 98% against the US dollar. And the Turkish lira devaluated 80% against the US dollar in the last few years. So last year in 2000...
So you're saying that 4% doesn't matter to them?
Yes, because the intraday volatility of their national currency is higher than 4%. So why does it matter to them? And they will stay with you. They will be loyal with you as long as you can prove them that you have the solid product they can trust for their family savings. And by the way, 40% of all the USDT holders are using USDT for savings. So that because we have people that live in Nigeria and emerging markets that need that as a lifeline against the devaluation of their national currency and inflation in their countries.
I take the point that Tether is not necessarily aimed at the US, but at the same time, there are always rumors swirling around about big global companies like an Amazon, maybe a Walmart, rolling out some sort of payment system or maybe a stablecoin competitor. And I think one interesting thing that's been happening lately is we've seen some retailers actually joining forces with crypto to try to lobby for the stablecoin bill, which is interesting. They're trying to reduce their swipe fees, I guess. Do you worry about that kind of competition coming in and potentially taking some market share from your business model?
Again, the countries where we operate and where we are more successful is, the US topcos are not necessarily that present, right? As I said, Tether invested half of its portfolio and half of its own equity. So outside the reserves of the stablecoin, we invested in building our distribution network. So we are building millions of touch points across the world. One interesting example is, we came across the concept. There is a clear statistic that 600 million people in Africa don't have electricity at home, but they have smartphones, they have small televisions and a few other things. So what we are doing now is we are investing in a company that is building kiosks in villages in Africa with solar panels on top, and they sell or they rent batteries for 3 USDT per month. So with 3 USDT per month, you can swap a battery 4 times per month, so once per week. Now, the average salary of a person in Africa is around $80. And so this is like 3 USDT are, a good compromise to have electricity at home with these very good batteries. So this is an example how we have already 300 kiosks. We are planning to ramp up to 10,000 kiosks by the end of 2026 and 100,000 kiosks by the end of 2030. So the idea is that by 2030, we can serve around 60 million people in Africa that will be running on USDT as their main currency. So we are actually converting people to get on the US dollar. That's why I say that we are the best friends and best ally for the US dollar hegemony. And just to finish, we have with that company on not only we are changing and we're pushing the adoption of the US dollar, it's a great example of a change that you will see from space, because if you see Africa is very dark during the night because they don't have electricity, but if you power up 60 million people, that will change, and that is a significant change.
There is an effort right now to regulate stablecoins in the law, et cetera. If this passes, there's something called the stablecoin legislation, the Genius Act, I think it's called, and can issue a stablecoin, a federal qualified non-bank payment stablecoin, something by the OCC.
The Genius Act for stablecoins, for stable geniuses,
right? The subsidiary of an insured depository institution, a state-qualified payment stablecoin. If something like this were to pass, you're talking about, your priority has really never been the United States. You're talking about Africa. You're talking about Turkey. You're talking about Argentina, places that have seen significant devaluation. Would you register in the United States as a stablecoin under this law, or would you choose to just the U.S. isn't where our activity is?
Right. So let me elaborate on the answer has multiple point of views. So, first of all, we really keep in mind that being the company that created the stablecoin industry in 2014 is a big honor that now lawmakers in the most powerful country in the world are looking at our technology and want to regulate it. So we are very, very excited for that. Second, the law and the Genius Act is a very well done piece of law, and it allows few things. First of all, Tether could consider to create a domestic US-based stablecoin. The difference is that a US domestic stablecoin would be used more for institutions. So the product market fit is completely different than a stablecoin that is used in kiosks in Africa, right?
So this would be actually like a coin that might have a different ticker. It wouldn't be USDT.
Yes, we are discussing about that opportunity, that possibility. I mean, look, we need to wait for the final language and to see which bill will pass, but definitely we are open to that. Tether is, we discussed before about law enforcement regulations and all that. Tether, not many know this, but Tether is the only stablecoin, also including the US-based stablecoins, that onboarded the FBI, United States Secret Services. We work daily with the Department of Justice and the other organizations within the US. We worked on more than 400 operations with US law enforcement. Across the globe, we work with 230 law enforcement agencies across 50 different countries. So when in the proposed Genius Act, there is the requirement of stablecoins, even foreign stablecoins, because USDT would remain potentially an international stablecoin, we would be very happy to continue our collaboration and see in the written requirement of a collaboration with US law enforcement that we think is sensible. And everyone now at least on X knows this. We are the fastest responder to law enforcement requests. Compared to our competition, we don't wait for court orders that allows criminals to get away with it and move funds very quickly. We immediately act upon being contacted by law enforcement. But on top of that, among our people, we have probably the most impressive investigation team in the entire industry, also across traditional finance. In fact, just a couple of weeks ago, there was the freezing of Garantex. That was a cryptocurrency exchange sanction, a Russian one. And we worked for months with the Department of Justice to find the right way to do it, the right process. It's a very good collaboration. We received, I think, a couple of weeks ago, a public thank you note for our proactivity in our collaboration with the Department of Justice. So this is how we are comfortable. So we believe that no matter if you are an international stablecoin or a domestic stablecoin, you need to work within the US parameters of sanctions and law enforcement. So we believe that it's important for foreign stablecoins to work with US law enforcement, but at the same time, the US domestic stablecoins and foreign stablecoins have a different value proposition. One is for people that are left behind by the banking system, because there are 30 billion people that are unbanked, that they cannot afford to pay $150 per year in banking fees. And those, I'm pretty sure that if you ask JP Morgan how many customers that they would want from our user base, they would say probably 4, not 400 million, just because our customers are all singularly are too poor of being of their interest. But that's something very unique to Tether. In the US, you would need different use cases for stablecoins because you have Zelle, PayPal, Cash App, and 600 gazillion ways to pay each other.
How big is your investigations team?
So we have a specific internal investigations team that is between 20 and 30 people, plus a very big compliance team. And then on top of that, we have been contracting and working with the leaders in the space when it comes to blockchain analytics. So we borrow also external investigations team and ecosystem monitoring tools. We work with Chainalysis, TRM Labs. We recently announced a huge freeze working with TRM Labs related to the Bybit hack and so on. So again, I think that there is no doubt that Tether has the highest standard when it comes to compliance and investigation within the cryptocurrency industry, and the digital asset industry, but also above and beyond.
So on this topic of cooperating with law enforcement, this is something I always wondered about crypto in general. But part of the selling point is anonymous transactions, right? And it's not even necessarily that you need an anonymous transaction in order to do something nefarious, like buy drugs or whatever. You might just want one for something like, I don't know, a husband buying his wife a birthday present and he doesn't want her to see it or whatever. Anonymity is part of the selling point here for some of your customers. And yet at the same time, we always hear that the transactions are traceable, you're cooperating with law enforcement. How do you sort of square that tension?
So here's the thing, right? So sure, blockchains are transparent and they're not necessarily anonymous, they're pseudonymous. So with proper ecosystem monitoring tools, and we spent 10 years to perfect this, we can trace transactions, we can prove that criminals are found and punished. Let me give you an example. I think less than 1 year ago, our internal investigation team started to follow certain transactions and they got some alerts from our triggers and configurations of our monitoring systems. And we found out that there was a potential pig butchering network that was converting or using USDT. And that was on all the newspapers then eventually. But it ended up that Tether was the company that initially found out that there was this pig butchering scheme and then contacted law enforcement, and we all together with law enforcement, we conducted the investigation and we decided to freeze these assets. These assets amounted to $220 million. Now, all on the newspapers, there was the headline, oh, USDT is being used by the pig butchers. But actually, not many understand the actual process. So pig butchering or a romance scam happens when you might have a girl contacting a guy online, asking for some money to pay the rent and whatever. Like, it's crazy that this amounted to $200 million, but it is what it is. But this girl that contacts the guy will not ask for USDT, will ask for a payment through a payment processor. They will usually send a link. So there is a guy that will swipe its card or input the card numbers on a website to do a payment to what he thinks is a nice girl. And then that payment goes through another payment processor, then goes to a cryptocurrency exchange, and that gets converted to USDT and moved on chain. So 3 different opportunities failed in the traditional financial system when the credit card is being swiped and then the payment processor fails to recognize the issue and all that. So 3 times people and institutions fail to freeze that transaction and recover the funds. And then when it gets to USDT, we find it out and we freeze it and we can return the money to the legitimate owners. So that is the headline that should have been there because it's the right one, it's the correct one.
That all makes sense to me. However, the definition of what's criminal can be a spectrum. It can change by culture. It can change by time. So, for example, in the US, it's illegal to deal drugs, but in another country, it may be illegal to distribute Bibles or distribute condoms to an NGO or anything like that. There are also certain circumstances in which capital flight could be considered a crime. And when you talk about some of these countries with intense devaluation of their currencies, I could imagine a foreign minister in one of these EM countries saying, Tether is contributing to capital flight because our own citizens
They're making it easier, right?
It's making it very easy for them to move their dollar assets, to acquire dollar assets in a way that we would never allow through our traditional regulated banking system. You talk about working with law enforcement. What if a law enforcement agency within one of these countries says, no, like we do not want our population swapping our currency to be able to hold dollar assets?
Very good point. So first of all, it's a matter of education, right? I met with the finance minister last year, and I thought walking in that meeting, I thought, well, he will be very annoyed for what we are doing. I will not name the country, but I thought that. And then I went there and actually, and that was something that I was going to explain to him anyway. But actually, what we agreed on is that, sure, many people in those countries are using USDT to fly and fight inflation and the devaluation of their national currencies. But on the other side, there are billions of dollars that are flowing in the form of USDT for remittances. So actually, USDT is counterbalancing those outflows, if you will, with the new inflows and new, faster and cheaper inflows when it comes to remittances. So the average percentage of a GDP of an emerging market when it comes to remittances is 20%. For Philippines, is $33 billion per year. And if you look at many other emerging markets, 20% is probably the low bar. There are countries that have 40, 50, 60, 80% of the GDP is remittances. So actually, we make remittances cheaper because if you look at the traditional remittances companies, they charge from 6 to 28% to move money internationally. So that is something that really well resonates with other country prime ministers, with institutions in these countries and so on. So in our point of view, we need to work primarily with US law enforcement and with Europe law enforcement. And we tend to not work with the tyrannical countries' law enforcement.
Okay.
So we started this conversation talking about how big you've grown. And, I mentioned you are an actual presence in the treasury market nowadays, in the repo market. As your holdings get larger, would you ever be tempted to maybe, I don't know if invest is the right word, but invest, trade a little bit more, maybe extend into slightly riskier assets, Bitcoin? I don't know. Do you diversify?
So our reserves are in the majority, quite high majority of US Treasuries. Short term, we have a bit of gold and we have a bit of Bitcoin. The reason for that is that there is, in the emerging markets, developing countries, those other two things are very well respected and of much interest. At the same time, that's why also we keep very good amount of billions within the excess reserves to also prove to everyone that we're not here to speculate. We have the entire risk management very solid. Even if Bitcoin was going to zero, the company would still have several $1 billion in excess equity. So that's the message we want to give. I mean, it is important to perfect a product that is very interesting for the audience, but at the same time prove that you are solid, that you're strong. And again, we are very happy to see regulations moving towards the reinforcement of what could be held in reserves by stablecoins.
So summing it all up, again, the company has grown quite a lot, an actual presence in traditional financial markets nowadays. What's the biggest risk to your business nowadays? This is such a cliche, but what keeps you up at night? What do you worry about?
Yes, could be. I mean, I'm sure that this will sound like an obvious and well-crafted answer. Well, maybe not well-crafted, but nevertheless, I think that I want to keep doing what I have been doing and what my team has been doing for the last 10 years. The biggest risk to me is that, for one reason or the other, for example, the US or other countries don't understand the opportunity, the potential of the stablecoin industry. When it comes to Tether, I think that really in the last month, we have been taking so many meetings within the Hill, and everyone has been incredibly receptive. So now there is proper education, understanding what we are doing. But what keeps me up at night is simply the fact that we have the biggest opportunity in the history of humanity to actually include billions of people in the financial world, and I don't want to fail.
Very, very high-minded. I was going to, real quick question. Are you talking with other Wall Street banks diversifying away from Cantor Fitzgerald, or is that going to be the only bank where you hold your treasury assets?
So treasuries are, and the beauty and the difference between holding treasuries and holding uninsured cash deposits as our competitors is that if anything happens, you can take your securities and move them anywhere else, right? So it's a very easy and clean process. But I must say that Cantor Fitzgerald is the best company that believed in this industry already 2-3 years ago when no one else understood this industry 2-3 years ago. So we are very respectful our relationship.
Plus, you have a friend in the White House, right?
Howard is a great guy, but I'm not allowed to talk to him.
Okay.
Oh, really? Oh, good to know.
All right, Paolo, thank you so much for coming on Odd Lots.
Thank you for having me. It was very exciting.
That was very fun. Thank you so much for coming in.
Thank you.
That was
Thank
great.
you.
Yeah.
Thank you.
Joe, that was so interesting. Obviously, there have always been a lot of questions swirling around Tether. So it was good to, put some of them to the CEO.
Can I say that when Tether reached out to us about, do you want to have the CEO on the podcast? I thought there was at least a 50% chance that we were going to get deep faked, that it was going to be some North Korean hackers, and that we were going to have to click into a link of that was something that looked like the word Zoom, but that actually wasn't, and then enter a credential, and then there would be a video
Send
of
your
some
private
AI.
keys.
So really, send your private keys. Here's an AI representation of Paolo Ardoino. I'm still not sure. It could be that when this comes out, maybe we're going to hear. No, I don't think so. But maybe when it comes out,
at a minimum, we can confirm the existence of Paolo, right?
We can confirm that we talked to someone who looks a lot like every picture of Paolo Ardoino. That we can confirm. No, I thought it was really interesting. It's a big force. It seems like a pretty big, real, powerful entity within global finance.
Yeah, this is the thing. And I guess going back to where we started this whole discussion, again, 15 years ago or whatever, I don't think anyone would have expected that we're in a world where stablecoins are so large. And we're in a world where, we're really preparing for stablecoins to become even bigger in the form of that stablecoin bill, putting in potential guardrails, that sort of thing.
God, what a sick business model it is. I mean, let's just talk about it. It's so sick. They're making so much money for no effort. And you ask, what's so complicated about the business? It's clearly not that complicated. They just hold a bunch of money and then they have a token. They just got to match it 1-to-1. And that's all. And then they collect the interest and they remit none of that to their holders. I do wonder, I asked that about that margin, whether it's going to compress. Paolo talked about, in the US, maybe for institutional, that margin is important. You got to wonder, maybe someone will enter the non-US markets with the idea it's not only can you hold dollar assets, but we'll remit that yield to you. But in the meantime, that's a money printer.
Printing money, yeah.
Yeah, literally.
All right, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest, Paolo Ardoino. He's at Paolo Ardoino. Follow our producers, Carmen Rodriguez at Carmen Arment, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots, where we have all of our episodes as well as the daily newsletter. And you can chat about all of these topics 24/7, including crypto, in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you like it when we check in on stablecoins, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.